All right, so I'm gonna show you guys how to enter a trade. So for trading in foreign exchange, simultaneously buying and selling a currency pair, exchanging one currency for another. Almost everyone has participated in the Forex market. So the currency pairs, we have the euro, US dollar, Great Britain pound versus the US dollar. There's always two pairs matched up to each other. Never one currency pair by itself. This is how it looks on the Android to the left, and on the right is the iPhone. So we have the US dollar, Swiss franc, US dollar, Japanese yen, US dollar, Canadian dollar, so on and so forth. So the basic trading terms that we use, you're gonna hear a lot about pips. Pips is basically a unit of measurement. As the market moves, as the exchange rate changes, it changes by pips. Pips equal money. The lot size, you wanna risk no more than 3% of your account balance per trade. Sell is down and buy is up. So if the market is moving up, you wanna be buying. If the market is going down, you wanna be selling. The entry point, EP, is the place where you enter the trade, take profit. It's basically what it says, take your profit, take your money and run, stop loss, stop losing money. Buying versus selling. Once you get your entry price in a sell, you want to subtract from your entry price for your take profit. And for your stop loss, you want to add. So if sell is down, you want to take away from your entry price. And stop loss, you want to add so it go higher because you're expecting the market to go down in a sell. So take profit, go down. If the market goes up when you sell, you want to put your stop loss above. And I use 15 to 30 pips, but as you learn, you'll know what you want to use. So if your entry point was 107.807, you want to always disregard the last number. So in this example of the entry point, we have 107.807. Disregard the 7. 10 minus 80 is 70. So your take profit would be 107.70, and then put the last number back, which is a 7. And if we wanted to add 30 to our stop loss, disregard the 7 again from our entry point. Disregard the 7. So 80 plus 30 would turn out to be 108.107. So in a buy, you're expecting the market to go up. Price is rising, you're expecting the market to go up. So if you entered here, your take profit, you want to put it above, and your stop loss, you want to put it below. And the buy market is going up. If it goes down, you want to stop your losses below it. So you want to subtract for your stop loss and add for your take profit in the buy. So with the same example, 107.807, take profit. For you to make money, the market has to go higher than your entry price. So you want to add to your entry price. So 107.80, 80 plus 10 is 90. And then you just put the last number back from your entry price, which is a 7. And the stop loss, you would just subtract it in a buy. Take profit, buy, you want the market to go up. So you want to put your stop loss down to protect your money. So 80 minus 30 is 50. So this is a quick example of how it should look when you're done. In a buy, take profit is above, stop loss is below. Add for your take profit, subtract for your stop loss in a buy. And in a sell, you want to add for your stop loss and subtract for your take profit. Sell is down, buy is up. So entering a trade, the first thing you want to do is check your lot size. This is an iPhone. Check your lot size, which would be no more than, you're risking no more than 3% of your account balance. So in this example, we're gonna sell. So we just hit sell once we see the screen here. We hit sell and it'll take you to the screen in the middle. And the numbers right below the pair's name, the GBP, JPY, 128.757 is our entry price. And because we sold, we can do the maths. Let's disregard that 7. Disregard the 7. 10 minus 75 would give us 65. So our take profit in this, once we hold this area down where the trade is, where the entry price is, hold it down, hit modify, and it'll take you to the screen on the right. And then you would put in the math that you just did, the 128.657. and then hit modify. And you would do the same for the stop loss. You would add to the stop loss. So if you add in 15 pips, it would be 75 plus 15, which would be 128.90, and then put the last number back, 7, to put in your stop loss. On the Android screen, you would check your lot size in the middle of the screen, that's below market execution. Once you have your lot size figured out based on how much money you prepared to risk, then we sold again. So we're gonna hit sell, and it'll take you to the screen here in the middle. Again, the entry price is below the pair's name, the 128.716. You would hold down this area again, right where the entry price is. Hold it down, hit modify, and the only difference with Android and Apple phones is that with the Android, your entry price is actually on the screen, right to the top. It says modify order number, whatever the order number is, and it'll be sell at the lot size, the pair's name at your entry price. So this number to the top of your screen will be your entry price. And because we sold, disregard the last number, and then so that'll be 71 minus 10, which is 61. So the take profit would be 128.616, and you would place it on the right side under green. Green is money, red is negative. So take profit would be on the right-hand side always, regardless if you sell or buy. Green equal money, so that's where your take profit would go. So you would just type it in, 128.616, and your stop loss, if you want to do a 15 pip stop loss, you would do 128.716. Disregard the 6, add 15 to 71, it'll give you 86. So your stop loss, you would type it in on the right under the red, 128.866, and hit modify to the bottom. And that is all for that.